Good afternoon, everyone. We are the group 2. Our topic for today is comparable company analysis. So, first is comparable company analysis, or COMPS method, is way to determine a company's value by comparing it with other similar businesses in the same industry. It assumes that companies with similar characteristics such as size, market, and operations should have similar valuations. Next is the steps in performing comparable company analysis. The first step is find the right comparable companies, identifying companies that are similar in size in the same industry region. The quality of comps is crucial. This means identifying businesses that are similar in terms of industry and region and size. The accuracy of analysis depends heavily on choosing the right comparisons. The analyst, based on criteria that include is industry classification, geography, size, growth rate, and margins and profitability. In industry classification, making sure that they operate in the same sector. And in geography, companies should be located in or same region. And the size is comparing based on revenue, assets, or number of employees. And the growth rate is how fast the company are expanding. And last, for the margins and profitability, is how efficiently they generate the profits. And the next slide is the example of comps. The table shows the company's name and their market data, financial data, and valuations.
Good day, everyone. I am the next reporter, and I'll be discussing number 2, the gather financial information. So once we have identified the list of companies that are most relevant or comparable to the one we're trying to value, it's time to collect their financial data. Usually, professionals use tools like Bloomberg Terminal or Capital IQ because these platforms can automatically import financial data directly into Excel. Pero kung wala access sa mga paid tools, we can still gather this information manually from annual reports or quarterly reports of the companies, though medyo time-consuming na siya. The next slide is set up the comps table. In Excel, we will create a table that includes all the key information about the comparable companies we're analyzing. This table helps us organize everything clearly so we can easily compare each company's performance later on. The table is the core data for a method called Comparable Company Analysis, or CCA, which is simply a way to figure out how much company is worth by comparing it to its competitors. So here's an example of what a comps table looks like. As you can see, we have several columns such as price per share, market cap, sales, EBITDA, EBIT, earnings, and different valuation ratios like EV to sales or P to E ratio. This kind of table gives us a clear overview of how each comparable company performs financially and help us later when calculating valuation multiples. The main information in comparable company analysis includes company name, share price, market capitalization, net debt, enterprise value, revenue, EBITDA, EPS, and analyst estimates. All of these data points are important because they serve as the foundation for our valuation analysis later on.
Good morning, Ms. Hazel. My name is James Patrick Chasey, and today I am going to talk about the steps in performing, or should I say, I am gonna continue to talk about the steps in performing the comparable company analysis or CCA or comps. And the fourth step is to calculate the comparable ratios, which means that with the combination of historical financials and the analyst estimates populated in the comps table. Now this is the time to start calculating the various ratios that will be used in the that will be used to value the companies.
And now let's proceed to the fifth steps of comparable company. It's the use of multiples from the comparable companies to value the company in question. Analysts will typically take the average or median of the comparable companies' multiples and then apply them to the revenue, gross profit, EBITDA, or net income, or whatever metrics they included to the account table. If the average of phi equals a ratio of the group of comparable companies to 12.5, then the analyst will multiply the earnings of the company they are trying to value by 12.5 to arrive at their equity value. Next one is formatting the table. For a good results, it's important to clearly separate market data, financial data, and multiples into separate sections so the reader can easily follow the information. Let's proceed to the interpreting the results. So once the numbers are complete and comps table is finalized, it's time to start interpreting the results. One way to use the information is to look for companies that are overvalued and undervalued. And that's all. And lastly, for the reference of our report, the discussion of the group 2 will end in this, and these are the references at the back of this presentation, and that would be all. Thank you, everyone.